Monday, traders, and welcome to what shapes up to be a huge week in financial markets. Look, but before we get into that, let's recap what happened. US market close on Friday because it's pretty important. So US markets on Friday did not have a happy ending. They had some selling hit the market again, some risk-off trading. S&P down 2%, Nasdaq down. More down 2.6%, and they both finished on the extreme lows for the week. And technically, they had big bearish outside range weeks, so not good. Okay, so why did this happen? There's never one reason. There's a few reasons for this. The first reason is that we did get some economic data out on Friday. We had the PCE, US PCE. Inflation data out in the US, which is the Fed's preferred inflation gauge. That came out marginally above expectations, which is not good. And this is before we start to see the tariff policy feed into inflation numbers in the coming months. So the last thing we need is for those numbers to start going up already. And then also we had the Atlanta Fed GDP tracker update on Friday as well. And that had Q1 GDP falling as low as minus 2.8%. So that is not good either. So if you put the two together, so rising inflation and slowing growth, that equals stagflation. It's one of the worst economic outcomes that you can have, and that certainly is not bullish. That is very bearish. So if we do move into prolonged stagflation, I would say that these markets will be trading a lot lower. Okay, we also have had a lot of Fed speakers towards the end of the week, and those Fed speakers are starting to lose confidence in their inflation forecasts. And we also had one Fed speaker that's actually started talking about potentially might need to raise rates if inflation does start to rear its ugly head again. So that's not good. And then finally, look, the thing that's been weighing on markets, it's no surprise, it is tariff policy, and the fact that we are getting very close now to the 2nd of April, which is on Wednesday, when we get Trump's and the US reciprocal tariffs. So market is nervous, scared, stressed about exactly how that is going to look, whether or not they're going to get a tariff shock on Wednesday. So one of the things is that when we find out the details of this, Trump has generally gone large with tariff policy when he first introduces it. So then it gives him room to negotiate. So look, I'd be surprised if we probably don't start off on some high tariffs on Wednesday, which again, obviously, market probably is not going to appreciate. But the bottom line is, look, we are 100%, we're going to get some volatility. We're going to see these markets move going into Wednesday and then post-Wednesday. So you need to be on your toes this week, guys. Okay, so some other things that, some other markets that are worth monitoring and focusing on at the moment. Certainly, US bond yields are moving again. So on Friday, we did see US bond yields get hit quite hard and a lot lower. So US 2-year yields and 10-year yields were down around 10 basis points on Friday. So we've got US 2 yields now below 4%, around about 3.9, and US 10-year yields down towards around about 4.25%. So I'd suggest if we continue to move lower with those US bond yields, it will start affecting the currency market. Certainly, that we'll start to see maybe some selling in the US dollar. Now, the currency pair that has the highest beta to changes in US bond yields is certainly the yen and dollar yen. We did see dollar yen close below 150 and opening in Asia below 150. Obviously, we start to see those yields lower. You're going to see dollar yen lower and the yen bid. On Friday, we did see some Tokyo CPI numbers, headline core, both above expectations, and potentially we're going to see a May a live meeting for the BOJ. So yes, the yen is something that in the next month we could see a decent move there. Very hard to stay long yen, especially against the US dollar, just because of the swap fees. We have talked about this before. One way of expressing a long yen position is via a short Swiss yen position, because certainly then your swap fees are negligible, and if we do see a big move in the yen, you're going to capture it via that. So certainly still like a short Swiss yen, and pretty good levels around close to 170 at the moment. Look, the other market that we've talked about quite a lot, and it's obviously the one that's getting a lot of headlines, is certainly gold. On Friday, it performed again. We closed new record highs, 30.80 plus. Daily record close, weekly record close. No doubt we're going to see a monthly record close for gold. All of that is certainly very, very bullish. We were talking about short-term targets up towards 3,100. Obviously, we are super close to that. Further out, short-term, we're probably looking now around about 3,150 to 3,200 now. So yes, look, I'd suggest not fading gold for the time being. It certainly is loving a lot of this uncertainty and stress in the markets. Okay, so this week we did say it is a big week, a lot going on. So tomorrow, data-wise, we do have some US ISM manufacturing data. That's always important to see. Tuesday, we also locally here in Australia, we've got an RBA meeting. Market certainly doesn't, was looking, even though we did see inflation a touch lower and Aussie employment lower as well, it looks as if the RBA is not ready to give us that second rate cut yet. But no doubt there'll probably be an easing bias to that. So rate cuts probably will come further out. And then Wednesday, D-Day, as Trump likes to call it, Liberation Day. That's when we finally get the details on reciprocal tariffs. So let's see how that ends up. But certainly, as we were saying, expect a lot of volatility on Wednesday. Also, at the end of the week, we are also going to see US payrolls data, employment data. That's always very important. Markets looking now for headlines to start, going a touch lower for employment. I think only 130,000 jobs. But certainly, if that number comes out even lower, that's going to move markets. And I'd suggest that it won't be market friendly, seeing a lower unemployment. And to finish the week after payrolls, we've actually got Powell speaking 3 hours after the payrolls number. So certainly huge action-packed week, and again, stress that these markets at the moment are very nervous, and so there is a risk for some big moves, and potentially, if we do get that tariff shock on Wednesday, maybe to see markets much lower. So good luck with your trading. Start the week. We'll check back in with you shortly.